Good morning. Good afternoon to my friends on the East Coast. I am Mark Sebastian. I am your only option, and welcome to Delta Strike. Who is here for the first time? All right, who is here for the first time? And yeah, happy anniversary. Welcome, MD Booth. Let us know if you're here for the first time. Let us know if you are maybe an old trader that had kind of gotten away and now you're back, because I am excited to be spending the next, 45 minutes with you guys. Welcome, welcome, welcome. I'm really excited for you guys. This is going to be a blast. So let me tell you about what you're about to see here at Delta Strike, celebrating our anniversary. So we have a cadence here. All right. We have a cadence here that we trade. So it starts usually with me breaking down what's going on in the overall market. Then I'm going to share my watch list and how I come up with it. And finally, I will then go through our portfolio. So when I'm going through the portfolio, if you're new, you just kind of just pay attention to what's happening. And then finally, we're going to hunt for trades. This is going to be great. Yes, it's our 15th anniversary. Vicky, we love you. We got a lot of our great traders here. We just closed a nice winner this morning, 79.49% in lift. We did that trade yesterday, and I'm pretty happy about it. So let's dig in. All right, why don't we share my screen? There we go. And I want to start by talking about where the overall market is and what has, and folks, when I'm doing this, I want you to know how my setup is. All right. So I'm looking at you right here. There is a professional level camera that I'm looking at right here. Now, obviously, I can't put a computer screen right in front of it, right? I'm not on a laptop. So I've got one computer screen on my right, and this is where I'm looking at your chat and answering questions, things like that. And then on my left, when I point there, that is where this is. So once again, I want to say thank you for coming and welcome. And we're really happy that all of you new people are here. And if you're back, we are really happy. And if you're currently a Delta Strike trader, I'm really happy to see you guys as well. You guys make us who we are. OptionPit is 15 years old, but we wouldn't have made it past a year without you. And folks, we do have clients here at OptionPit that were traders day one. All right, day one. So what we're doing here is I'm going to share with you, what we're trying to accomplish with Delta Strike is I am going to be looking at big money flow. So these are trades that are 5,000 contracts, 10,000, 25,000 or more. And I'm going to kind of break down what the trader that executed them is trying to be involved, is trying to do. And then we'll see if we want to jump on board with them. Oh, yeah. So, well, no, I'm talking, we have customers that were traders with me going all the way back to 2010. I don't know if any are currently in the room. They're pros now at this point, but we're really happy. So now that's what we're going to experience here. And I'm going to start by breaking down what I'm seeing in the market. And for those of you not paying attention, this sell-off has not been nearly as bad as the headline makes it. All right, what you're looking at is the 3 months return, so call it since the beginning of the year, of the Dow Jones Industrial Average, the Triple Q, the S&P 500, and an ETF called MGK that is a mega cap ETF. So the very top line that you're looking at here is the Dow Jones Industrial Average. Since the beginning of the year, it's down 0.8%. Does that sound awful? No. But then you look at MGK. MGK is the 90 largest stocks in the S&P. And in the last, call it 3 months, it's still down nearly 9%. That's not so great. Got as low as over 10%. Then in between those two, you have the S&P 500 down about 4% year over year since the beginning of the year. And you have the QQQ, the NASDAQ 100, down about 7%. So what is causing these kind of this variance between the Dow, the S&P, the Triple Q, and MGK? What is causing that? Tom says it's shenanigans. Kaputs says it's tech stocks. Goss to go says it's just a few stocks getting hit. Grant hit the nail on the head. It is the Mag 7. And really, it's like the top 10 names. So we here at Option Pit, we actually call it the Great 8 because we have Broadcom in that group. So take a look here. Here is Microsoft. It's down 10% since the beginning of the year. Meta, pretty flat, down $10. Amazon's down 15%. NVIDIA, how's that year gone for NVIDIA? It's down 20%. Google, my goodness. Yeah, it's down almost 25%. So that is where the pain is coming from. But you look at a name like Procter & Gamble, it's up. J&J, well, outside of yesterday, even with yesterday's really ugly J&J candle, it's up on the year by about 10%. And then, so that's really what I think is kind of interesting about this overall market. GE, General Electric, sleepy, boring, awful General Electric. It's up $33, 20% since the beginning of the year. So this has not been, it's been a disaster in like the Qs and SPY because they're so heavy in these names. Now, the good news is with the rest of the market going up, yeah, Intel not so hot either. With the rest of the market going up or being flat and those Mag 7 dropping, what does that do to the overall market? It rebalances the indexes. Right before we got this big sell-off, So I'm going to go to 6 months now. You know, when we peaked at an all-time high in February, the Qs were almost 50% those 8 names, and the S&P was almost 30% of those names. So what you have is the stocks that had been completely ignored go up, so they become a bigger piece of the index. And the stocks like Apple and Amazon, when they're dropping, they become a smaller piece. So we get a little bit of a balance out there. Let's see where we are now. All right, so Apple is still about 7%. Microsoft is below 6. NVIDIA is below 6. Amazon below 4. Meta 2.7. You know, you got the 2 Alphabet twins. They're about 3.5. Broadcom and Tesla are about 3%. So when you add these up, you know, 13, we'll call it 13, 18, 22, 24.5, 28, 30. So they're still a big piece, but they're not as big as they were. In the Qs, you can see kind of the same story. Costco is now a bigger part of the triple Q than Tesla. It's actually approaching Meta. Broadcom is a bigger part of the index than Meta right now. So we've got this shift. So that's where we are at the markets. All right. Now, let's talk about my watch list. Somehow my write-up didn't get in there. I think I accidentally cut it instead of copied because I use a part of it for my DTE letter. But what I was showing you is that tomorrow's a coin flip. All right. Yeah, Christian, if you want to add that back in, that'd be awesome. But it's a coin flip tomorrow. We could be up 100, we could be down 100. But the way markets are pricing what is about to happen, they're pricing it like a binary event. Does everyone know what a binary event is? So today after the bell, at 4 p.m., our president, Donald J. Trump, is going to announce the tariffs on quote-unquote Liberation Day. Now, what I want you to pay attention to is the numbers right here. And if I have to magnify it, I will. Let me see if I can do that. No, that's alerts. All right. What I want you to do, I'll cut these. There's Hannah J flashing the proper way to show the number 3 with your hand. Why can I not? Oh, here, we'll do this. Getting out the paint. And then I'm going to resize it to 150. All right, now, can everyone read what's on my screen? Because I want to point out what I'm really paying attention to here. So here's today. And I want you to pay attention to the number right here. And the number right here. And here. And then look where we are next Friday. So a binary event is the classic binary event is a coin flip. If it lands on heads, the Chicago Bears get to decide whether they want to defer or kick off and, something like that. If it lands on tails, then the New York Giants get to do that. And so a binary event is an event where one of two things can happen. And they are pricing it like everything is like we're going to get a wild move over the next couple of days, because this number represents option prices. How expensive is it to buy or sell an option? In this case, the S&P 500. And we get the announcement today after the close. So when is the market going to realize the effects of Liberation Day? Yeah. We're going to realize it tomorrow. And what do you notice? The option prices are a cumulative about 37.19%. Friday, we have non-farms. They're saying we may get some follow through. Those option prices are 34.3%. But then look at next Friday. It's less than 21. They are pricing this thing like we will be done with all of this nonsense by Friday. I don't know that that's true, but that is the way they're pricing it. And you're saying, Mark, I don't have your fancy Live Vol Pro that's $500 a month. Fine, you don't need it. Believe it or not, you can kind of look at the same thing in Toss. Thinkorswim. Just about every platform has this option price number in it. And lo and behold, take a look. Here is those option prices in Thinkorswim. Now, every platform is going to price the cost of options a little bit differently. But if you go to Trade or Analyze and click on and go to the options, you'll see the aggregate option price for that contract. Take a look. Again, super expensive through Friday, gets way cheaper by the 14th. There's a 16-point drop in option prices between the 14th and tomorrow. Hannah says, okay, Mark, so when people check the price of options and they're high or they're low, what is the next step? What is the next step once you have that issue? Because this is going to determine how you trade for the entire day, what you're looking to buy and what you are looking to sell. So, and it's informative of when the market might move. We will get wild moves tomorrow and Friday. Once we get to Friday, the market is pricing itself like everything's over. Chip asks, does that 16-point drop in IV between those dates, is that like 1% of the VIX? It's a if you look at VIX, it's a couple of percents in VIX. It's the VIX back at the VIX. So the VIX, if you're unfamiliar with the VIX, all right, I'll pull it up for you here. You can actually see it. The VIX is kind of the overall market gauge for option prices. So if you came up to me and said, Mark, how expensive is it to buy an option right now? I would look directly at the VIX, trading 21.7. You can see it right here. And I would say they're expensive. And with that drop off that we're going to have into next week, we could see VIX go from where it currently is to 17 or 16. Maybe lower. So that's where we are with this overall market. All right. So, and that's why, tomorrow and Friday, it's so perfect that you're here with me for the next 3 days, because these are going to be the 3 most exciting days maybe we get all year. And I got the opportunity. It happens to land on Option Pit's anniversary, and I happen to give you this access so that we can trade together. Hannah says, that's actually couldn't be better timing. Thanks for starting Option Pit 15 years ago today, Mark. Yes. Hannah in the audience is, for those of you that have specific questions about what Option Pit does and what we're about, Hannah is our director of new product development and your customer advocate. I think she's going to join me on Friday, but she's in there answering a lot of your questions. And so is Christian and Justin. So we just want to say thank you. How long has Hannah been around? Several years. We love her. All right. And Chip and Vicky are also here. They're 2 of our moderators, and they're here to answer questions as well. Thank you for reminding me that. All right. So now I've kind of laid out the lay of the land. All right. It took a little longer today. Normally, this will only be about 10 minutes, but I had a lot to explain, and there are a lot of new people here. Does everyone feel like they've got their head wrapped around what I was trying to say and what my point is? Yes. All right. So, and the point that I made in my watch list was exactly what I just talked to you guys about, this binary nature. And folks that are new, you will be getting a copy of this watch list Thursday and Friday. In the watch list, I give you my market analysis, and then I show you the 5 most interesting trades that I saw. Sometimes they're going to be really good, sometimes not. So, a few interesting trades. This was a big trade that went up on Tuesday. A trader bought 82,000 of the $5 put in American Airlines. 82,000 puts in American Airlines. Why would someone buy 82,000 of the December 2027? So these expire in almost 3 years. Why would someone buy 82,000 of those with a stock trading 10 cents and with a stock trading $10? Why would somebody be doing that? No, and I did tell you what it is here. It smells like bondholders. So if I own American Airlines debt, one way I can really hedge my position is to own puts on the stock. So it smells like we've got some bond owners getting nervous. And it makes sense, right? United Airlines and Delta Airlines, the official airlines of Delta Strike, Delta Airlines, are absolutely eating American Airlines' lunch. American basically fired their head of corporate outreach about a month ago because customers were hating them so much. They lost so much business with corporate. All right, now, next up on my list, Ford. Near-dated call buyers. So these calls expire Friday. They expire Friday, April 4th. It's the $10.35 call. Somebody bought about 17,000 of these for 8 cents. Stock was around $10 at the time. So why, this is what I always say. Why would someone ask that? And you look and take a look. They bought them yesterday, and look what is happening with Ford. They're up 50% on their calls overnight. We've got another 25,000 of them going up right now. More being bought today. These are buys. All right. So let's talk about, I don't think it's a short squeeze. Ford is not hard to borrow. So PGA Paul said, hey, it's a short squeeze. Stocks, in order to short squeeze, need to have a huge amount of short interest, which means traders are short, are selling the stock. They're borrowing the stock from someone else and selling it. No, there's something else here. Which company makes which major auto company is the most American in terms of how they build their where they build their cars? Chip says Tesla. That is correct. Now, who is number 2? It is not General Motors. Who's number 2? That's right, Ford. If you buy a Ford, it's about 75% made in the United States. They do not have a lot of tariff exposure. But you know who does is General Motors, Toyota. Toyota does build the Camry in the United States, but they've got a lot of other cars they don't. This ain't great for the Germans. This isn't good for the Koreans, the Japanese, the Chinese, the Germans, and the Indians, people from India. And you're saying India? Tata Motors owns Land Rover and Jaguar. So Ford is kind of set up to win. Now, one of the things I'm always trying to do is improve Delta Strike. One of the reasons why we keep Hannah here, among the fact that we totally love her, and one of the things she's so good at is she's constantly challenging us to be better. She and I are absolutely on that wavelength. We're always trying to get better. And so one of the things I'm doing is testing some new trading strategies. And we currently, in my beta test, I own the April 10.5 calls. April 11th, 10.5 calls. They're not quite where I want them yet, but I think we got a little follow through here in Ford. A couple other interesting trades. Paramount. This is a little more of a complex trade. The trader sold the June 10 puts and bought the September 10 puts about 11,000 times. Now, this is one I need to look at. Yeah, and it was opening. So the way this spread works is the trader wants option prices to go up in Paramount, and they want the stock to kind of slowly drop. Now, this is not kind of my trade, but this is not the type of trade we would do here, but it is informative that they are still heavily betting on Paramount having some issues. The cost of options is spiking in this one today. Not fully sure what the story is here, but they are bidding up options today. We're going to look at Paramount some more here, folks. Last on my list that I want to kind of look at, I was surprised. This is the first in Pfizer. We're not going to buy calls in Pfizer, but my up until yesterday, traders that are normal Delta Strike people, how much put buying, which means they think the stock is going to go down, right? If you see call buying, they think the stock is going to go up. If you see put buying, they think the stock is going to go down. How much put buying have we seen in Pfizer over the last 2 weeks without a lot of calls? A lot. A lot. So it kind of raised my eyebrow. This is the first large block call trade I had seen in probably 2 weeks. And then, Jets is the ETF for airlines. And, I just kind of mentioned, this might be kind of a, it's an ETF. I'd rather trade one of the specific airlines. But when we see a large block order in a very sector-specific ETF, it tells me that I should be looking at some of the names. All right. So Hannah wants to know, do I have a big money flow scanner that auto generates for you? So it doesn't the scanner, you're going to see it here in a second, and because we're going to look at some trades here. What the scanner does is go through and pulls up all the large block orders. And then I spend some time kind of going through looking at what is interesting to me, because I don't want to miss any of these huge orders. And I can already see some fun and exciting ones. And I can't wait to talk about it. But before we do that, let's and folks that are new, you're not going to make a lot of action on this. I will let you know if you can still join us on this trade. Our first trade is in AM. We own the 18 puts. They're currently 55 cents. Would I buy those here? I don't think they're terrible. I do not think they're bad. For 50 cents, you're 40 cents away from the strike. Would I buy the May 2025 18 puts for 55 cents? Yes, I would. All right, my next trade is in Valley. This is the steel company. We own the May 2nd 10.5 call. We're in for about 24 cents. They're currently about 18. Would I buy those today? Heck yeah. And I probably will buy more. XPV. We own May puts here. They're about break even. I think they, when I look at the chart here, yeah, those don't look terrible. I would pick those up. Now, if you're new, I don't expect you to do any of these trades. I'm just kind of letting people know that, yeah, I still like some of these. And then we have a small position in BlackBerry that is just getting kind of torched. They had earnings this morning. Stock was down big. It's getting a lift. This might be a catalyst for this thing to pop. So there's a real brief update on these. All right. So now let's take a look at the scanner now and start looking at some trades. Yeah, real bad. Well, I'm gonna give you a trade today. So that's where I want you to concentrate if you're new. All right, don't worry about what's in the portfolio. All right, now the first big trade I see today is that I'm kind of interested in is US Steel. That's X. Now, I already have a position in US Steel from a special situation. I've already monetized part of it, but we don't have a deal yet here, and it's kind of interesting to see what their timing looks like. So let's take a look at this US Steel trade and talk about it. Now, there's a decent amount of order flow in US Steel today. All right, so the first trade that went up, these are all calls. So they're all some form of traders playing US Steel to go up. So trade number one, you'll notice the April 11th 45 calls are trading a lot. The first trade we saw today, a trader sold the April 11th 45 calls to buy the regular May 45 calls. The next trade we saw, a trader sold the October 45 calls 20,000 times at $4.55. Then the biggest trade, the one that really caught my eye, we've got another sale of the April 45 calls versus a buy of the May 2nd 45.53 call vertical. So call vertical is when I buy a call close to the money and sell something further away from the money to try and lower the cost. All right, so now we know what the orders are, but they don't really tell us everything. I want to start with these April 11s. All right, now, this makes a lot of sense. So what you're looking at here is called an option chain. Or we might call it an option montage. And going from left to right, we have something called open interest. The next one is volume. The next one is called delta. And what the delta number represents is if US Steel goes up $1, how much will this specific option make? So, for instance, the April 11th 43 calls carry a 49 delta. So, if US Steel goes up $1, then the April 11th 43 calls will make 49 cents. Now, what's important here is the open interest is 46,000. They've traded about 50,000 a day. Now, open interest is how many options are currently outstanding. How many people own options? And what is important here is that I believe the April 11th call sale is a close, not an open. But then when you go to May, take a look at those 42,000. Do you see any open interest in May 2nd? You don't. So that call spread, they bought the 45 calls and they sold the 53 calls. That call spread for May 2nd is opening. They think US Steel is going up. And then the jury's out on these May 45 calls. Might be at, sometimes you can't completely tell, like what we're looking at here. Open interest of 11,700, 9,000 trading today. So this is pretty darn bullish paper. May 2nd is interesting. So there's our first kind of breakdown. X has earnings on, they're saying that 5-1. Let me double check here. So this is another trading platform I use. Right now they're saying May 1st for earnings. So that could be that would be why they are playing this. They want to own those earnings. US Steel's worth looking at. All right, now the next trade I'm kind of interested in is in Broadcom. And I'm going to go look at Broadcom in a second, but I want to look and see kind of some other trades that I might be interested in. VRT. So I'm going to, in succession, I'm going to look at VRT. I'm going to look at Broadcom. And last but not least, I'm going to see if there's anything else I'm kind of interested in. Oh. Don't love that. Stellantis. Ooh. We're going to look at Gap. We're going to look at Gap stores. All right. So let's start with the first one I want to look at, which is VRT. Thank you. Veritiv Holdings up $1.73. This company is digital infrastructure for data centers, communication networks, commercial. So they do electrical components and electrical stuff. The last 2025 has not been a fun year for VRT. Let's just say that. opened the year at about 125. It's currently trading 77. But what they did today, kind of interesting. We have a brand new bull trade in VRT. This is a call spread again. The trader bought 20,000 June 95 calls. So they expire on June 20th. And then against that, they sold the June 115 calls. Net, they paid about $2.64 to make money between $95 and $115. I don't hate this trade. I think we could do it better than them. Because one of the things with these big money flow guys is they typically know what the stock is going to do, but they're not expert option traders. That's where our advantage really rests, guys. So VRT, I don't know that I want to do this today, but it's really interesting. So we're going to actually circle back to this trade tomorrow when you're here with me yet again. All right, here's Gap Stores. It's up $1.13. Yet, we got a trader buying the Gap 21.19 put spread, 8,900 times. Stock's having a really nice day. It was literally below 20 on the 31st. You can see this one is wild. But I don't hate the idea of owning puts in this thing. I'm going to come back to this one. And then my last stock that I wanted to cover was Broadcom. And you look at this one, you know, it's kind of interesting here. You know, they had this amazing earnings in January. I mean, take a look. The earnings took Broadcom from 170-ish, 180, to 250 in about 3 days. And now it is swallowed up that entire move and more, despite having awesome earnings. So what did they do in Broadcom? Obviously, this one trades a ton. But we have what's called a three-legged trade. And this is a really smart one. I like this trade. This is a really, really interesting play they did. Again, they're looking at June. In June, they did what's called a 1x3x2. Now, again, if you're newer to options, you don't need to worry about what it is. But what I like about what we're looking at here is that this is I just said these guys aren't expert option traders. The trade that this trader did shows real knowledge of options. So I think Broadcom could be interesting. Now, here's the issue you run into, right? we could see, we got a binary event tomorrow. Now, there's a reason they're probably going out to June. Next earnings are likely in during the June contract. So, what option is kind of interesting to me here? What's something attainable that's not going to be overpriced? So here's one of the reasons why we don't typically trade a name like Broadcom. The options are really expensive. The May 180 calls, if I buy one of those, I'm talking $800. So Broadcom, we're watching. VRT, we're going to look at Broadcom and VRT tomorrow, post Liberation Day. I'm using air quotes, Lauren. And then U.S. Steel, really interesting, but it is a buyout play. So that leaves me falling into the gap. I'm almost usually. So I'm looking at gap. They bought that April spread. But again, remember we talk about option prices. Remember I showed you stuff on option chains just a second ago? All right, now let's do the same exercise. Here's April. Here's May. And then here's May 2nd. Which one of these, and now, so you can see, if I give it a little more time, I'm getting better value on my options, right? May, in terms of option prices, is less expensive than April. So now what that tells me is I'm going to go look at May. And rather than buy the April 21 puts, I can do the May 21 puts that were literally in the money yesterday. So what we're going to execute is a buy of the May 16th, 2021 21 puts for about 70 cents. All right, so what I'm going to do is, and Hannah, you want me to type this in the announcement section, not through the portfolio section, right? And we're looking at, generally speaking, I don't like to spend more than $500 on a trade. So I'm probably going to buy like 5 of these. It's about a little over $350. We're trying to. So I'm buying 5 Gap May 16th, 2025, 21 puts for less than. Hannah, I'm dialing back. I'm dialing it back, Hannah. Don't worry. Everyone should. I'm dialing it back. All right. So and then I like to put a punny title in my email. So keep an eye out for a punny a punny trade idea. And there is the trade. And what I'll do is, and so if you're trying to find the trade that we just did, you've got my screen right here. If you scroll below my video, you'll see the trade right there. All right, everybody. It is 12:57 Eastern Time, 11:57 p.m. here in Austin, Texas. I have to bounce, but don't forget, join me tomorrow and join me on Friday. And I'm so happy so many of you are here. And I hope everybody has an amazing rest of your trading day. And I'm looking forward to seeing you tomorrow. So for Hannah J. Sellner and Vicky and Chip and everybody here that is at Option Pit, all my clients, Justin and Christian and Drew, for all of us, I want to say, I'm Mark Sebastian. I am your only option. And I hope we hope you have a good one. Happy anniversary, Option Pit.